Hey everyone, welcome back to Corporate Decoder, the place where we peek behind the curtain of corporate filings and see what is really going on. Today, we're diving into Ashford Hospitality Trust's latest report, and let's just say it involves some property plans and a bit of shuffling. So, what is the big news? Well, it looks like Ashford Hospitality Trust has completed a significant sale of a hotel property. They've offloaded the Embassy Suites Houston near the Galleria for a cool $13.5 million. This is more than just a simple transaction. It signals a strategic move to manage their asset portfolio. This event officially happened on the 9th of February 2026. Now, why is this important? Selling off assets can mean a few things. It could be about freeing up cash for new investments, paying down debt, or perhaps streamlining their business to focus on more profitable locations. In this case, the sale of the Houston hotel generated some immediate cash. Ashford Hospitality Trust, or H Incorporated as they're known on the New York Stock Exchange, is a real estate investment trust that focuses on owning and operating hospitality assets. They have a handful of different types of stock out there, including common stock and various series of preferred stock like Series D, F, G, H, and I. They also have these interesting preferred stock repurchase rights. So when they make a move like selling a property, it can ripple through their various financial instruments and affect different classes of shareholders in different ways. Now, beyond the property sale itself, the company also provided some additional financial information. They've attached unaudited pro forma financial information for periods ending in late 2025 and the full year of 2024. Pro forma financial information is essentially a what-if scenario showing how the company's financials might have looked if certain events, like this hotel sale, had already happened. It helps investors understand the potential impact of these changes on the company's overall financial health. While we don't have the full detailed financial tables from the original report in this excerpt for a deep dive, understanding that this pro forma information is available is key. It suggests the company is looking ahead and planning for the future based on these asset adjustments. Think of it as the company showing you a snapshot of their finances after this hotel sale, to give you a clearer picture of where they stand. Now, let's talk about the bigger picture and what this might mean for Ashford Hospitality Trust. Selling off a property, especially in a major city like Houston, is a pretty definitive action. It tells us they are actively managing their real estate portfolio. In the world of real estate investment trusts, or REITs as they're commonly called, this active management is crucial. They need to constantly evaluate which properties are performing best, which ones might be better sold to fund growth elsewhere, or simply to strengthen their financial position. The $13.5 million from this sale is a tangible benefit. For a company like Ashford, that cash injection can be used for a variety of purposes. It could mean reducing their debt obligations, which is always a good sign for financial stability. It could also be earmarked for acquiring new, potentially more profitable hotels, or perhaps investing in upgrading their existing properties to make them more competitive. This filing also touches on their various stock classes and their trading symbols on the New York Stock Exchange. We see common stock AHT, and then preferred stock series like preferred stock Series D HET, and so on. This indicates a complex capital structure. When a company makes significant operational or financial decisions, like selling a major asset, these decisions can have different implications for each of these stock classes. For instance, holders of preferred stock might have different rights or priorities compared to common stockholders, especially when it comes to the distribution of funds or the impact on dividends. The fact that all these securities are listed on the New York Stock Exchange underscores their public nature and the regulatory oversight they operate under. Companies like Ashford Hospitality Trust are required to keep investors informed through these types of filings, ensuring transparency in their operations and financial dealings. Looking at the broader context, the hospitality industry is always evolving. Economic conditions, travel trends, and local market dynamics all play a huge role in a hotel's success. By selling a specific hotel, Ashford is likely making a calculated decision based on their assessment of the property's current and future potential within its market. They might be seeing greater opportunities elsewhere, or perhaps the Houston market for that particular hotel faced new challenges. So, what's the takeaway here? Ashford Hospitality Trust is demonstrating proactive management of its assets. The sale of the Houston hotel is a clear move to adjust their portfolio and likely to bolster their financial flexibility. While we don't have the granular financial data from the pro forma statements in this snippet, the filing points to a company that is making strategic decisions to navigate the market. Now, looking at Ashford Hospitality Trust's overall direction, they seem to be in a phase of strategic repositioning. Selling assets, especially for cash, can be a sign of strength if it is done to reallocate capital to better opportunities or to de-risk the balance sheet. However, It can also be a signal of weakness if it's done purely to meet obligations or due to underperforming assets, without seeing the full financial statements and how this sale impacts their debt to equity ratio or their recurring revenue streams from operations. It is hard to say definitively. A key risk for hotel REITs is always their sensitivity to economic downturns and changes in consumer spending on travel. Opportunities lie in identifying markets with strong growth potential and acquiring or developing properties that can command premium rates or occupancy. In conclusion, Ashford Hospitality Trust is making calculated moves. The sale of the hotel is a significant event, and the pro forma financials will offer a clearer picture of its impact. Investors should keep an eye on how this cash is redeployed and what the company's next strategic acquisition or divestment might be. They are clearly not standing still, which is generally a positive sign for a company in a dynamic industry. Alright, that is our breakdown of Ashford Hospitality Trust's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.